Recently, I have become consumed with trying to unravel the secrets of these 4 words echoed in the Bitcoin community.
Never sell your Bitcoin, right?
We hear it all the time, and it's a nice platitude, but I wanted to unravel those mysteries and how does that actually work for the average non-whole coiner, and how do you leverage that? So if you want to unravel those mysteries and even to see how I got AI involved to build an app and a model, stay tuned.
Watching Bitcoin climb higher feels like watching a train leave without you, but it's not too late. At Drip2 BTC, you can grow your Bitcoin like never before. Earn up to 3,000% APR on credit conversions and discounts on Bitcoin purchases. Step 1, buy Bitcoin. Step 2, deposit it. Step 3, let your wallet do the work. Don't miss this chance to change your life. Start today at drip2btc.com.
Hey guys, welcome back. Drip Coach here with Drip and Farm for Poverty, where we don't trust, we verify and operate with integrity and transparency. So those 4 words, never sell your Bitcoin. We heard it from Trump. We mentioned it when he signed the executive order.
From this day on, America will follow the rule that every Bitcoin knows very well. Never sell your Bitcoin. That's a little phrase that they have. I don't know.
He says, I don't know if it's true, but I guess we'll see. And then Michael Saylor, we know he always supports this rule.
When do you sell your Bitcoin? When you need it to conserve your life, the lives of those you love, then yeah, you trade it, you borrow against it, but you only need 1 share. You do not sell your Bitcoin.
So from Michael's point of view, it's only in a life or death situation and you borrow against it. So again, never sell your Bitcoin, borrow against it. And even over here, Samson Mao talking about when we see these Omega candles has the same theory.
There's one thing that's different, which is if a nation state is buying in size, you kind of have to understand that you probably shouldn't sell it. So when Bitcoin starts to go really exponential, like it's going from 1 to 2 million to 3 million, then I think people are going to question, what exactly am I selling the Bitcoin for? Why am I selling it for the dollars that the government is spending to buy Bitcoin?
And that makes a lot of sense. So if you see the government is getting rid of the shitty fiat currency that they make out of thin air, stealing your time and your wealth to buy this asset, then why would you give them that asset in exchange for the thing that you clearly see they're trying to get rid of? So again, it's like, yeah, why are you selling it? What are you selling it for? Even Crypto Casey boils this down really well.
A lot of Bitcoiners are never selling their Bitcoin. And here's a recent event that will help us understand why holding Bitcoin is the move. This week, Coinbase announces Bitcoin-backed loans. Millions of users can now borrow against their Bitcoin on Coinbase. And to help the implications of this click for some of us, here's the deal. Wealthy people leverage debt in order to, 1, avoid paying taxes, and 2, accumulate wealth-generating assets. For example, many wealthy people buy real estate, never sell it, and instead take out loans against the properties and use the money to acquire more properties. See, when we generate income or sell something for a profit, we have to pay taxes on that income. While when we take money out in the form of debt against assets, we don't owe any taxes on that money.
So that is the leveraging debt model that the wealthy have done with assets historically. And that makes a lot of sense to buy more assets of the same or of better value or just to get leverage. But the question remains, how does the average person live off of it or utilize it? So if you're not already wealthy, how are you supposed to never sell your Bitcoin and still make a living? Because like, what's the point of acquiring this Bitcoin if you can't use it to enhance your lifestyle or the lifestyle of those around you? So like, if you use the gold analogy, imagine buying stacks and stacks of gold bars with your hard-earned paycheck, your business income, but you don't do anything with that gold. You just keep it in a vault and that's it. So you never take any, as Rob Powell said, lifestyle chips off the table. You don't go on a vacation. You don't do anything with the family. You don't buy, any nice clothes or take yourself out for a meal, nothing. So then what's the point of having this wealth? So there has to be a way to leverage it. And that's what I've been showing you guys that I started doing with Ledn. Just recently looked into that and their loans. And the reason I started with them first is because this is one of the few that I'm aware of that allows you to get actual fiat. So it can go into your bank account, and then you can use that for your day-to-day living standards. There are tons of other loans out there, or Bitcoin-backed loans, where you're using Bitcoin as collateral in the DeFi space and in CeFi, as Crypto Casey mentioned, on Coinbase and even Binance. And they have a lot lower interest rates than the 10 to 12% that Ledn has. But these typically are in USD. Some of them have to also stay on the same chain. You can't move it off. Or USDT or USDC. Basically, it's in a cryptocurrency. So it's harder to use it as a lifestyle chip, so to speak. But the question still remains, how do you acquire this asset and then be able to leverage it in a way that you can live off of? And that's what led me to, I'm going to show this video later. Jack Mahler's talking about what Strike is doing. So Strike is now offering a Bitcoin backed loan option. But I ended up creating this over here with ChatGPT, asking it some questions, writing the Python code, going back and forth, testing it out. Definitely with AI writing your code, you don't have to have any knowledge on it, but it does definitely help to have a little bit of be able to read the code a little, so you can tell it where some of the errors are that you get. But regardless, basically what this is a, as it says here, Bitcoin Wealth Leverage Simulator. So in my head, I wanted to figure out what does this look like for someone to be able to take Bitcoin as collateral and then either A, take out a single loan, do something with, or B, use it as their month-to-month kind of day-to-day financing for whatever their expenses are. And the second version is this dollar cost average with independent loans. Basically, if you were to each month buy Bitcoin as the default and then take a percentage of that into fiat to pay your bills. So each month you're increasing your Bitcoin position, not a one-time thing, but a monthly thing. So this first one is if you have a large sum, and let's say you were really good at planning out your expenses, and I'll use what's out here for the average person living out here, average living expenses to live moderately, pretty well off, upper middle class, about $1,000 a month for everything. So let's just say you were able to take out one lump sum of $12,000 to cover the year, and you had the equivalent of $24,000 in Bitcoin to get the loan. That's where this kind of forecast table will come in. And the DCA is independent is where you're doing this kind of not paycheck to paycheck, but in a way it is. It's like you have a job, you get paid, and from that paycheck you usually pay your bills, but instead you would put that all towards Bitcoin, and your leftover would also go into Bitcoin, and then you take a portion of that to pay off the bills each month. So what sparked this is this video here that I want to play for you guys.
If you hold Bitcoin on Strike, we will give you a loan against that Bitcoin. Now, why would you want to do that? Well, the worst thing you could ever do is sell your Bitcoin, right? The question is, how do you get access to the wealth that is generating by you holding Bitcoin without having to sell the Bitcoin? Now, in order to understand how humans have traditionally done this, look at an asset class like real estate. If someone bought Manhattan real estate in the 1600s and the building value just kept going up over time, smart investors don't actually sell the Manhattan building, just let it keep going up over time. What do? They remortgage it, they refinance it, they borrow money against it, and they take that money and they do something productive with the money, okay? So if Bitcoin's going up around 50 to 60% a year, and you can get a loan against that Bitcoin for 8, 9, 10, 11, 12, 13, 14, 15%, whatever, as long as that number is significantly below the 60, then never sell your Bitcoin, borrow against the Bitcoin, right? And that way you can put, so what do? I put all my wealth in Bitcoin. I take a loan out against my Bitcoin, and over time, as my paychecks come in, I slowly pay off the loan. And I never sell my, being able to borrow against an asset changes the entire dynamics of the asset class, because you don't ever have to sell the asset. Bitcoin all of a sudden goes from a scarce, desirable money that everyone has access to globally to a scarce, desirable money that everyone has access to globally that no one ever has to sell. Let me clue you in on a tip, you guys. People that have bought Manhattan real estate in the 1600s still own it today. You know those rich New York trust fund kids that piss you off at the clubs? They're inheriting real estate that's 500 years old. Why would you sell a scarce asset that only goes up? The problem for Bitcoin is we can never get a loan until we built it. So the whole point of the product is you can deposit Bitcoin on Strike. We'll give you a loan. It's the coolest user experience in the world. Is you download the app, you either buy Bitcoin, you put Bitcoin on there, and you literally just slide. We actually had to add a little bit of friction because it was so easy to just slide, get $1 million loan, withdraw it to Chase. It arrives in Chase in 2 seconds. You can do whatever you want. You buy a house, you need to start a business. It's crazy. So really, really cool product. Never sell your Bitcoin. Just
So that's where my thought process kind of went to. It's like the traditional is that they want you to never sell your assets and then use the leverage to accumulate more assets. But again, if you still have day-to-day needs, it's like, well, how does that average person do that? And is that possible? Now, big, huge risk, red flag, whatever you want to call this, Strike, Coinbase, Binance, Aave, any of the lending platforms, once you give this away, you are indeed no longer in control. So you have to trust these platforms. In the DeFi side of things, you're trusting the contracts, and if it's open source like Aave, then you're trusting the fact that it's been battle tested. Other people out there in the ecosystem that understand the code have run it through the ringer, and all the exploits and bugs have been fixed. And then on the CeFi side, you're hoping that whoever you are doing this loan through is Gucci, doesn't get hacked, isn't rehypothecating your funds, blah, 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 blah. That's why I went with Ledn, because they literally give you transparency. One, they show you proof of reserves. Two, you have an option to pick a higher interest rate for loans that are not being rehypothecated. So rehypothecated loans are lower interest rates, meaning they take your collateral and they loan it out. So there is a risk that whoever they loan it out to could lose it. And then the higher interest rate loans are the ones that are locked into a contract. You're still at risk of maybe a hack or something happening to them, but they have been operating for a couple years now and never lost a single satoshi and billions in loans. So I was like, let me test them out first. Coinbase's version came out earlier this year, and they have like 4 to 6%. I can't show you guys, it's only on the app. It's not available on the actual website, but it's through this other vendor, Morpho. So you would have to, I haven't read everything about them, but you would have to read how they're putting your loans. I tried using their Morpho, Ask Morpho kind of AI chatbot about rehypothecation. It kind of gave me some mixed results. I couldn't nail it down to find out what they're doing with your collateral. I believe Coinbase will pass the sniff test, but it's still new, so I'm not kind of looking into them. But the point being is that there is a way that you can do this, but there are still risks. So what I wanted to do was, like I said, create this kind of simulation, this model, so that I could see what happens. Because not only is it the risk of the entity holding your Bitcoin, there's also the risk of being liquidated. So you have to pay attention to how much your LTV, loan to value ratio, is based on the price of Bitcoin. So there's external market conditions that affect that. And this version that I ran here and what I created is all these different variables that you can change. So you can start with the total amount of Bitcoin, which I put in 0.15, because at these prices, that's about $1,000. Sorry, that's 0.0115. It doesn't show that last number, but that's about $1,000. And then with the 50% LTV, that gives you $500. I picked that because, again, out here where I live, this would be about the average. $500 a month is what you spend on like living expenses minus the rent and things of that nature. So it's enough to get by. And if you have your typical $1,200, $1,500 paycheck, then that's a feasible amount to start with. And it just makes it easy to simulate these things. So anyway, you pick the loan APR. 8% is in the average range, and this will be for a like stable coin backed loan. So in order to get this to your account, you'd have to still send this through a centralized exchange, or if you're in the US, you can still use Spritz to pay your bills, but not their credit card, debit card version. That's still locked. Then you change the liquidation threshold. Typically it's 80%. Some of the loans are even higher. With the higher, the better. So the high liquidation basically means if your loan to value ratio drops significantly and you will need more than 80 or 90% of collateral to support that loan, then it can be liquidated and you lose all your capital. But 80 is about the average. That's what Ledn has. That's definitely a safe place. Then simulation, how many months? Then this is a pricing scenario where you can put in your own percentage rates of change that it changes each month. This is just one huge 80% drawdown, like one bear market over the course of a year. This one is sideways. This is cycle based. So this is actually the yearly averages post halving. So from the date of the halving to 1 year later, that'd be year one. The second year mark, third year mark, and then of course the fourth becomes the next halving cycle. So these are the actual historical averages that can be put in there. And then this allows you to do a DCA strategy, which goes into that loan, which lowers that loan to value ratio. And then this is just basically your monthly cash flow, like how much money you have and what your bills will look like. So all that being said, I can show you what that looks like real quick. So we have here in the simulator, this is the Excel spreadsheet. It's going to be easier looking at it in another chart, but this basically takes the month that the loan was opened, what number loan that is, because remember you're doing this every month, and then the current price of BTC, the amount of collateral that's in there, the interest accrued, the monthly interest, the total you owe, and the LTV ratio. So as the Bitcoin price changes, then you find out which loans are at risk to being liquidated based off of that LTV value. So it's easier to look at it in this chart here, which you see that this first loan was opened, and then due to the drop in Bitcoin at this point in time, however many months this is, 7 months later, or actually I guess it's at this point here technically, at the 5.5 month mark, it becomes at risk unless you're adding to that principal. And again, that's all based off of this one here using one of the month-to-month historic cycles. So the TLDR on this is that, one, I'm going to be testing this out so that I can actually see how this works. I've already done the 2 loans on Ledn, but now I want to actually do it with my month-to-month bills and kind of see how this goes over time, because the name of the game is to stack sats and accumulate more Bitcoin. But again, remember, there is an inherent risk, one, with the platform that is custodying your crypto, and two, the fact that you are indeed taking leverage out. So you definitely want to ensure that you have an ability to add to that balance. And that's what Jack talks about in this other clip. I don't think I'll play it because we're already at the 18-minute mark. But basically, it's about continuing to add to your principal so that that LTV value goes down. So that is more so on the standard loan amount when you have one big loan, and you can keep adding to that and then taking out the additional capital on there if one of these platforms allows that. In this one, you have to kind of babysit each loan independently and just pay attention to it. And you could still dollar cost average into Bitcoin into a separate stockpile that you could then later add to whichever loans might be at risk. And the way Jack is referring to this is that if the platform allows, you never have to actually pay back the loan. So like Ledn doesn't have a monthly fee, and at the end of the 1 year mark, you just have to pay back the loan, or you can just roll it over. So in Jack's example, you would actually just continue to add collateral and over collateralize your loan and never actually pay it back until Bitcoin price appreciates enough to where, yeah, you can take a portion of that and pay it back, or yeah, you just keep rolling that over because your Bitcoin is appreciating at the ARR of 50 to 60% versus your loan having a 6 to 13 annual percentage rate. So if that be the case, then it's just like, yep, just keep accumulating the debt, buying more and more assets, and then you just never have to pay it back. So there's a lot more to unpack in here. Maybe I'll do another video showing more details about this and how this can work. But the main thing is that I wanted to test this out myself and see how it does work. As you hear those 4 words, never sell your Bitcoin. And I had trouble trying to explain this to some others in the community, people that I've talked to. They don't quite understand leveraging debt, and they think that doing this is a scam. So I urge you guys to do your own research, understand how the wealthy have played this game and accumulated assets, and realize this is indeed an opportunity for us that are in the middle class or even lower middle class, or in some countries out here, if you're in poverty. This is an opportunity to actually be able to, quote unquote, pull yourself up by your bootstraps and given access to the wealth generating systems that the wealthy have been using for hundreds of years, and pass that on to their children, and us never being able to get a slice of that pie. Because if you never have to sell your Bitcoin and you pass that down to your children, they never have to sell it, and then so on and so on, well, then you just created a legacy, a dynasty, etc. So there is something here regardless of the amount that you're starting with, and this allows you to kind of stack sats on steroids, because you're able to still use those satoshis to fund your day-to-day living expenses, and while still being able to add to that balance. But like I said, this does require having, one, your expenses and kind of dialed in. You can't just be living paycheck to paycheck and not being able to save anything. And 2, being sticking to that, paying attention to it. Because in this example, it's like $500 is your expenses, but you still have another $500 that you are saving, and maybe previously you were putting that in a savings account, and now you'll be putting that whole $1,000 straight into Bitcoin versus $500 to pay for the bill and $500 into savings, or saving in your checking, whatever. That's all $1,000 in a Bitcoin, and then you get $500 back to pay those bills. So there has to be some level of excess that you're already able to save, or else you are definitely going to be more at risk of getting liquidated, because you have no way to, 1, fund the loan, and 2, stave off any of the potential liquidation events that could arise due to market swings. All right, hope that provided some clarity and gave you guys some insights on how this can work. If you're curious about this, I can't really save this, but I can figure out a way to share this somehow. The code, I can definitely share the code. So hit me up in the comments, something like that, and I can help you walk you through the steps. All right, smash that HBO special, help a brother out, like, subscribe, comment down below, and until next time, live daily and achieve your impossible. See ya.
Want to pay your in real life bills with crypto? How about send crypto directly to anyone with a bank account? Spritz Finance is a decentralized solution to be your own bank and connect your crypto earnings to real world bills and payments. They do not take custody of your assets and allow support on multiple blockchains and Web3 wallets. Sign up below using my referral link and you will get $50 back when you make your first $50 bill payment with crypto. Additionally, I will be using referral bonuses to airdrop, donate, or burn based on community feedback. Sign up now.